Greetings, Dr. Jeffrey Scott. This is my Market MRI Pro update for Wednesday, October 29th, 25. Still recovering from the weekend event. Hope everybody who came to lovely, but not so lovely this week in South Florida, that you got home okay and on time. And of course, after you left, the weather has turned to what my wife prefers to. This is why we live in Florida weather. Um, well, I'm a little worried about the market. I'm going to show you things that I like, things that have got me concerned, and try and project what is likely. We got the Fed cut as expected. Powell cut 25 basis points, said they're going to start easing off the pedal and stop quantitative tightening December 1st. But then during his speech, he said no confirmation that we would have another 25 basis point cut this year. And in fact, he kind of doubled down on that. Well, what happened? Bonds dropped, yields went higher, and the question is the market about to drop? And of course, having Microsoft disappoint, being down 20 points after hour, having Meta being down big after hours, somewhat balanced by Google. With Apple, Amazon, and more earnings on tap, it's going to be interesting. So right now, after hours, Google's up 6%, eBay's down 7, Meta down 7, Clack down 3.7, Microsoft down 3.7, FMC down 24.9%, CMG down 15, TMDX down 11, Carvana down 8.8, and Pi down 8.8. The amazing thing is, and maybe it's Google, but the futures, although they're negative, just look at where they are right now at 817. The futures have turned positive. So maybe some China news or something will come out to save the market, but it'll be interesting to see what happens. I also remember the comment of the first move may not be the right move, and we'll see what happens on Thursday. But a lot to be fearing right now. And then I'll show you some good stuff too. So again, Jeffrey Scott, marketmripro@gmail.com, Google Group's top-down trader, www.marketmripro.com. I've been trading, investing for over 30 years. Thank you for being here to listen to my rantings and ravings. No, I'm not a market professional. I am a physician. I am a cancer doctor, but I love the markets. I've been a student of the markets for a long time. And maybe somebody will comment it, but I'm also a pretty good teacher and I love teaching. I don't want to sound obnoxious, so I'll just say that I love teaching. So welcome, hit subscribe if you're new to the channel, hit the alarm so you know when I post them. If you like this, give me a thumbs up. And if you really like it or hate it, put something in the comments or email me. As always, these videos are for educational purposes only. And anything I recommend should be taken in the spirit of education and not considered investment advice. Again, I do these videos so that you can see how I use the tools to trade top down. Remember, trading involves risk. You are solely responsible for any investment decision you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools in multiple platforms. My Google group is called Top Down Trader. I use that group to disseminate information. I use it to post things that I don't post on YouTube, invites to private meetings, and discounts on my tools. And there's a round number that I charge. It's less than one, it's zero. So love to have you join. Love to have you participate with what we do. And lastly, earnings and news are important. Everybody knows about Powell. Now, the market actually went up before he spoke, so maybe we'll see that relief move in the morning. The fact that there's green there is remarkable. We should have jobless claims and GDP tomorrow, but we won't. And on Friday, we should get the ever important PCE complex, which we know the Fed relies heavily on. But hey, we're not going to get that either. And I said over the weekend, with the SNAP funds expiring November 1st, I got to believe the pressure is going to be on the Dems to come to an agreement. I sure hope so. It's nonsense what's going on right now. What do we got tomorrow? On Thursday, Lilly and Merck in the morning are big names, Comcast. And then we got Amazon, Apple, Coinbase, Reddit, Western Digital, Roku, Cloudflare, big um, after hours as well. And then some energy and more on Friday. It is a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I talked about how I sometimes will protect positions. Those who were at my meeting, I shared with them that I had raised a lot of cash because I had concerns short term about the market. I've also had a pretty good year and I wanted to frankly protect my performance. And before the market closed, I bought some $240 puts on Microsoft, which will protect that position. But obviously, those puts cost money. So let's take a look at what we got. For more information about trading, what I do, the software questions, my educational programs, or anything, feel free to reach out to me at marketmripro@gmail.com. I am not a big company. I have myself and my programmer Praveen and a support person. We're standing up in India as our sales of our tools have increased. So you'll get direct answers from me, and Praveen can help with any technical problems. And he's at coding at marketmripro.com. On to the charts. So, um, what did we see in the market on Wednesday? All right, so this is the one sheet I like to keep, well, one of the sheets I like to keep open on one of my monitors during the day. I work full time. I have a large company with a lot of employees. One of the leadership team, one of the founders. So I actually do work and don't trade all day, but I can't help myself. I like to look what the market's doing. And this is what I built for that or had Praveen built. It shows me some major ETFs, how they're performing, what's going on with the new high, new lows. And boy, look at the new lows. They were almost low single digits several days ago. Big change. I like to look at some breadth and I like to see what's working. So we'll start here. 1 day close. VIX was up 2%, nothing big. Dollar up 0.57. Not necessarily a good thing for the markets. Q's up 0.45. Spiders relatively flat. Diamonds down 0.14. And then the big loser, Russell, down 0.85. And Bitcoin, which has really been weak of late, was down 2.7. On the new high, new lows, I just look at the absolute number of positive new highs minus new lows of 52 weeks on the NYSE, but boy, that's a little number, and it actually flipped negative on the NASDAQ. We still have plenty of new highs, but the new lows have rocketed up. So a mixed picture over here. The blue or the green is today. The gray is yesterday. You can see not many sectors are up, but improved from yesterday. Not many industry groups are up, but were improved from yesterday. Only 24% of the stocks in the S&P 1500 were up today. 360 stocks, I guess that would be. Wow. In the NASDAQ, only 26% were up, and the NYSE only 27 were up. So even though the Qs did okay and the spiders were up there, another day of just beyond bad breath. So that should be a concern to all of us that, breadth in itself consistently low when the market's making higher highs is a divergence. And volume today was on the NYSE was up 10% from normal, down a little bit from normal on the NASDAQ. If we look at what's working, 1 day energy, which was on the bottom yesterday, tech up 0.72, big cap tech leading the way. We'll see what happens tomorrow. Industrials down 0.26. Look at the numbers on the losers. Real estate down 2.73, staples down 2.36, and materials down 1.96. From a theme perspective, what's working is lithium, uranium, clean tech, copper, semis, autonomous driving, China, artificial intelligence, industrials. What's not working? Cybersecurity down 5%, fintech down 3.7, U.S. home construction down almost 3, 2.3 on millennials, retail down over 2, blockchain down over 2, cyber down 2%, cloud down 2%. So this was even though technology was leading, it was narrow because a lot of the traditional tech things sold off. Let's take a look at the timing briefing. This is a weekly briefing. Let's watch just this line. It's green throughout. We're still long. Notice the big gap up on the week on the spiders and the Qs. They still look great, but think of this when I start to look at gold. And if you look at the Russell, a down session today, there were the laggards still in a buy mode, and diamond still in a buy mode. If we flip to a daily model, you'll see different looking picture. Traded down to the WMA and bounced for the Russell, still in a buy mode. Diamonds, not quite a bearish engulfing pattern, but a bearish looking candle, still in a buy mode though, and the Qs and the spiders. So if I want to be bullish and an optimist, I'd say that our buy sell model still says to be long, short-term long, weekly long. In reality, I'm concerned about this market. Why am I concerned about this market? Let me show you the ways. Let's look at the charts. Actually, let's go to the buckets first. Notice how we have shifted far to the left. Today, we closed with 15% of the stocks in the NYSE below their bands, 20% of the S&P 1500, 11% of the NASDAQ, and 15% of the Russell 2000. Not weak enough to throw in the towel and say we're going to bounce, but getting to the point where you start to think about a bounce. So that could go in the mixed, maybe bullish side. My guess is it goes further to the left. Let's look at the market breadth. You could see the breakdown on the NYSE. I mean, the trading to the 50 here seems like a natural. Does it go to 200? That would be deadly. But let's see if we get another pull back to the 50 and a bounce. But then look at the NASDAQ, a totally different picture. Bit of a hangman doji there, but look at the gap, 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 gap. Are we going to fill some of these gaps? Oh, yes. A small thing happened today. It's called the Hindenburg Omen, fired again on both of these. How many Hindis do I have to see? That was one of my favorite things to talk about. We had a nice conversation about it this weekend. But the Hindenburg Omen, it can mean nothing, but it typically means you're at risk of a sell-off. And although most of them are mild, the big ones occur. All of them occur after Hindenburg Omen. So I think it's something to watch. You could see breadth. Stocks above the 20, 50, and 200 turned down hard on the NYSE, but nowhere close to a signal, and turning down as well on the NASDAQ. This is where you got to get to be meaningful. We're not there yet. So the new high, new lows, still positive on the NYSE, barely, and turn negative on the NASDAQ. AD lines negative on both, up down volume negative. So it certainly has turned negative from my opinion. If I look at the market breadth, look at the divergences. We hit all-time highs during the day on the spider, the NASDAQ composite. Close. I can't tell if we got an all-time high. High was 83.32. Here was 80. Yep. Even on the S&P 1500. And whether you look at the stocks 13-week new high, new lows, above the moving averages, the AD lines, they're all going down. We got massive divergence here, folks. I'm going to put that one in the bear camp. So Hindenburg's bearish divergence, a sell-off after a rate cut. I think the daggers are building up against the bulls. Let's take a look at the index charts. Let's blow it up and take a look. Those that were with me yesterday, okay, know that I talked about the high jump bar being triggered on the major indices. and that we would pull back or go sideways. The thing works almost every time. You could see yesterday we're at 100. Today we're down to 98.86. All the high jump told me, go back and watch the video if you didn't see it, is that when we get to this level, we always revert a little bit to the mean. It doesn't mean we're crashing. It just says we're going to pause. So you could just pause to refresh, maybe a couple of days, and then strong seasonality takes over. Don't know. But I would be a little bit concerned here. We'll see how this resolves. Is this a horrible candle? No, it's up 0.05. We opened here, we traded up, traded down, closed in the middle of the range, above yesterday's close. I think we have to wait and see. It's those divergences that worry me. It's that high jump, which is still at an elevated level. If we look at the Qs, look at this, almost looks to me that this week has been in a climax run. Have we seen this anywhere recently over over the last month or so? And we have. Go look at GLD and we'll look at it in a second. Now, the good news is we're going into super strong seasonality. Bad news is 1, 2, 3, 4 gaps in a row at the open. I'm unusual for something that's not an ADR, and the Qs are not an ADR. And do we fill the gap and come down to that 17? Just think about it. It'll hurt. But does it mean anything bad? No. Pullbacks are natural. We get extended, we pull back, we go higher. And that's what I think we're going to do. And I think the divergences in the Hindenburg Omen sort of play into that. You look at the diamonds, and by the way, yesterday the Qs were at 100%. Yesterday the diamonds were at 100%. Today the diamonds are at 95. What that means is it went from the most extended it's been in a year to a little bit off of that peak. And similar to the Qs, a very gappy picture, kind of a reversal looking candle down 0.14. Certainly not much damage done today, and on pretty massive volume. If we continue our journey through the different indexes and we look at the Russell, what does the Russell tell me? The Russell's already pulling back, but how bearish can one be? We got this channel line here. I think that's a pretty good line, don't you? And I'll draw another one here. This one may not be as easy. Let's see. Let's draw that. All right, it's pretty simple for me to see that. Do we did we get down low enough and we bounce and go up to the top of the channel? Seasonality says maybe a couple more days lower and then we bounce. I don't know. I don't see is that super bearish? No, it's a pullback in an uptrend. Those things happen. Decent volume today. Wouldn't surprise me to come down and get close to touching that. What about the VIX? When the VIX is low, look out below, George used to say. When the VIX is high, it's time to buy. Well, it's low, and it moved up some today. When it's low, when it's not doing anything, I don't get too nervous, but I think that's something I'll be watching. It wasn't up a lot, and that's good. It was up 3% off of a very low number. And then the dollar, which has been struggling with the 200, the market's showing some concerns, and we break above the 200. Now, we are way off the highs. And we got a bunch of potential gap fills. Does he come back up to 28.85? Could. Hopefully it doesn't, because I think if we start to see the dollar break out, that probably says bad things about the U.S. market and more. And so that's the indexes. Let's look at the commodities. Remember I said the Qs and gold? What does this look like? Well, it doesn't look like the Qs because they actually had a down day on the way. But that's, whoops, that really looks like the Qs to me. And what did we have there? A high jump of 100%. Lots of gaps with potential for gap fills, extended from the moving averages. And we know what happened. A big gap down, tried to bounce to the 17, gapping it again, and does it get to the 50 before the ultimate bounce? Is that not, at least this area here, not be concerning compared to the NASDAQ, the Qs? I think it is. Silver, similar pattern, maybe bouncing already. Oil, it's kind of mixed. Boy, I wish they'd refill the strategic reserve when we're down here, but it's below the 200. Natural gas, well below everything. And then the other thing that's bothersome today, they cut the rates. Aren't the rates supposed to drop? Well, not if the bond holders, the bond markets, the big money, the smart money, they weren't happy because they dropped bonds and the rates went up 1.88% on the 10-year, and it looks like it was 1 point, just 0.2. No, that's not what I wanted. It's down here. 1.17 on the 30-year. Concerning. Higher rates, not good. Now we got a long ways to go before danger zone. One thing I would show you that's a little bit goes against the negative case. These are guppy charts, and I don't look at them every day. But if you look at when the market does poorly over long periods of time, and let's just go look at January 1st, 2008. We were in the midst of a bad market, I think you could admit. And the reason why I'm picking this is because it'll be right in the center of the chart. And it may not give us something because I bet the market wasn't open that day because it's a holiday. So let's just go to January 4th. Come on. And let's go to daily. And let me just do it here. January 5th. Well, back to daily. Well, it's not 88, Jeffrey. If this was a live meeting, somebody could have said that. Notice how in the Great Recession, financial recession, how these guppy charts dropped below the moving averages and they stayed there for some time um, and took a while to get back above. This is good. This is bad. This gets you into choppy, but sometimes you don't want to miss the early part of the rally. But what I see is nothing. Well above the moving average, no damage. So it suggests to me that with all my negativity tonight, rates up, Hindenburg Omens, to say bad breath, this is halitosis to the max. It's horrible breath. I still don't think we have a massive sell-off here, unless it turns out we get some data that shows we're in a recession and the Fed's late to the party, and that could happen. Take a quick look at the JAS layout and look at the top-down perspective. So we got 3884 stocks today. Let's look at performance today. Leadership was energy, industrials, and utilities. Why not look at those? Everything else is red anyways. This gives me a number of industry groups. Let's rank them by percent return. And uranium, marine shipping, electrical equipment, oil, gas drilling, agriculture, independent power. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Of these 10, 1, 2, maybe 3, 4, 5, 6 have to do with data centers. That has been the theme for quite some time. This gives you a list of all the stocks in that group. And let's just filter out teeny weeny things, $3 or $500 and 500,000. And that leaves us with 112 different stocks. Now, what I like is pullbacks and uptrends that are breaking out. So let's just scan now for pullback and uptrends. And that takes us down to 54. Let's rank them by impulses. These would be stocks that had something good happen to them. So let's take a look. So Phillips 76, or yeah, Phillips 66, 76, my butt. Pulled back to the 50, had a nice move on earnings today. They were on CNBC. They pay almost a 4% dividend. Look at this change, 23% growth, 17% surprise on earnings, a surprise on revenue. You know, the street's priced in what they expect. So that change is probably priced in. It's the surprise that's not. So Phillips 66, you want a nice dividend in a stock that's in an uptrend and put your stop somewhere below the 50. Although remember, this isn't trading advice. It's just how my mind works. And if you want to read about it, you can come in here and say, hey, I want to read Seeking Alpha. Double click, and hopefully it's going to pop up and show you what they said. All built into the program, all comes with the basic purchase, both the earnings and the fundamentals. Next is NESR. Don't know this stock, National Energy Services Reunited Corp. We did build in a way unconventional contract to NESR, leading provider integrated energy service, Middle East and North Africa. All right, so they got a big contract. That's always good. I guess that's the N in canceling. Doesn't pay a dividend, makes money, revenue. It's kind of a small play. Hayward, I think weren't they in the electrical? Let's see. Investors with an interest in electronics miscellaneous. What do you think they're necessary for? Data centers. Did they have earnings today to cause that big gap up? They did. 15% surprise, 5 on revenue. I mean, I'd go look at the report, see if they raised to give you a triple play, earnings up, revenue up, guidance up. And look at this though. What is the high jump? The high jump today is 100. That's concerning when you see extension, and it's moved a little bit off of the 200. So this one might drag down a bit before it goes higher. How about Caterpillar? It looks like a meme stock. My God, from less than 300 to almost 600. Earnings, I think, construction leader, well positioned to profit, data centers being built. I mean, I did one of these months ago where I talked about the different parts of the investing sphere that are going to be in that do data centers, and this was one. Another one was Bloom Energy, which is just what a rocket. Um, and this gave us a great opportunity to get in. Now, of course, it had earnings around this time too, but it broke out of that flag and just continuing to go. And again, it's 100%. It has a PE of 101. Now, its earnings per share growth is pretty freaking massive, so maybe it deserves it. But stocks like this, these rockets have a tendency of coming back. It reminds me of OKLO, something that we played. Oh, I remember. I gotta OKLO, something that we played earlier in the year, and it did the same thing, and then it stubbed its toe. AESI, Atlas Energy Solutions. Data centers for 10, what do you think? Let's see if there's anything about data centers. Oh, autonomous trucking. That's another high. Autonomous vehicles is another thing that's been doing well. Earnings are coming on the 3rd. I probably, unless I had a position in this, I don't have any edge. I'd probably pass. WHD, oil services play. Pump, another oil services play. Did this one have earnings? They had earnings today with a big positive surprise. So for a lousy market day, there's a lot of neat things. Neighbors is up after hours, I believe, and they had earnings yesterday. So from a top-down perspective, um, there's a number of stocks here that look interesting. Unfortunately, many of them are extended. MTZ is a industrial play that's involved in data center construction. Um, CEG, Constellation Energy, is a utility that's involved in building power for data centers. UEC is to me, I call it a secondary uranium stock, but you know what? UEC, let's pull this down here. Is another one. I mean, these are not the leaders, but they look pretty damn good, don't they? Excuse my French. You want to know what the leader is? That the leader here is CCJ. And this one really has done great, as you could see. So Nothing's changed for 6 months. Data center, data center, data center. Wow. Um, Usually that's where I like to pick from, but I know, and I'm just as guilty, a lot of people want candy. So I made your life easy. I've got two scans that are my best stocks. A plus scan, we'll only have a couple tonight. Cocoa, we talked about this last week. I believe it's on our leaders list of market leaders that we put together this weekend. And you could see a nice breakout here in cocoa. Didn't finish great. It's in the middle of the range after the gap and it's extended. But boy, what a move on a tough day. SAN is one of the Bank Santander, so South American Bank, but they also have U.S. branches. Beautiful uptrend, pull back to the 50 and a breakout today, and it was on earnings. They had a 18% growth, 11% PE, revenue up with surprises on both. No surprise why it's up. The other scan that I built, which is more of a pullback and uptrend scan, the general market is the A's. Typically, you're going to see more of the A's than the A pluses. And let's see what we got today. All right, we'll go through these very quickly. AMSC, American Semiconductor. This to me is more of a solar play. Um, I like sideways consolidation on the 50. It's always to me is a safe place to make a purchase. It had a CPR breakout momentum, relative strength turning up at OBV out of a squeeze. Looks interesting. EHang, EH, Chinese play. Bottom fishing, but breaking out above the 200. Enliven Therapeutics, don't know this thing from Adam. 100% upside. Here's what you should know. Everybody's excited about its earnings potential, but I have no idea what they make. Development small molecule therapeutics. All right, this is a very early stage company, probably worth 100, 200 million. I don't have the data. Okay, Eaton. This is a data center play in the electrical components. Uptrend, sideways move, looks like it wants to break out there. You've got squeeze, breakout momentum, relative strength and OBV turning up. This is like crazy. GLW, what do they do? Fiber optics. What is it used in? You got it, data centers. I mean, is this just crazy? 24% earnings per share growth, 20% revenue, earnings surprise, PE 34, pays a 2.5% dividend. Glaxo, not in the data center. Woohoo, woohoo. A gappy thing because it's an ADR. Hayward, we looked at already. Huron is it's in the insurance business. Must be an earnings move. 1028, 25% increase in earnings. Excuse me, in revenue. 16% earnings. PE is 20. And let's see what it says. All right, you'd have to go read that yourself. LSCC, Lattice Semiconductor, pull back to the 50 in a breakout. MIR, Mirror Technologies, what do these guys do? Well, radiation detection, measurement, analysis, and monitoring. I hate to say it, but if you're building a nuclear energy power plant, you probably need MIR, so it's in the same group. It is nuts. Here you are, 50% growth in earnings, 22%, excuse me, 7% in growth in the revenue. Multiple is pretty high, but again, it's in, likely has a data center place. Let's see. Nuclear related revenue. Small nuclear reactor wins added to the order book for this radiation detection company. This is just nuts. ORN, Orion Group Holdings. I don't think, what does this company do? It's not going to tell me what it does. Energy. Boy, A lot of negativity on 1015. Mining looks like LED lighting. Have to do some research, but um, to me, kind of a triple top area and it's too loose. SYM, symbiotic, big move, pull back, trying to test old highs. TER, a big winner today. And guess what? They're in the data center space. Major gap up. My gosh. Why don't we just buy data center ETFs and stop looking at the stock market? And there's a reason for that. I remember in the 2000s, in the dot-com era, they even had a new way of saying Qualcomm. Every time CNBC would come on, they show a huge move and they go Qualcomm, Qualcomm. It wasn't Qualcomm. It wasn't about. It became a craziness, and you're almost feeling that right now in the data centers. WCC, Wesco International, industrial play. I like the pullback to the 50 and the breakout here. Um, Earnings are in the morning or in the afternoon. I don't buy right in front of earnings. I have to make a decision to hold or not. For example, I decided, oh, no, came out. Nope, this is 7:31, so it comes out later. On the Microsoft, I had too much in profit, so I protected them with puts. Usually that means the stock goes higher, but that won't happen tomorrow unless there's a big reversal. Wave Life Sciences too low in the pattern, and ZWS, a water solution. Like the move here, breakout off the 50. Again, was there earnings? Earnings look like they're tomorrow. I don't like to buy in front of earnings. Beth's growth stocks to buy for August 22nd, 21st, 18th. Earnings. Do they need water solutions for data centers? I'm sort of kidding, but not really. So there you go. Use the A plus and the A to find stocks that look interesting, may or may not be actual at a given point. But to me, top down gets you into the right industry groups at the right time. I hope you don't mind my ranting, ravings, and my opinions, but hey, it's my video and it's free. No, I enjoy doing this. I enjoy the feedback that I get. Join Top Down Trader. It's even better for the feedback, and we'll see you tomorrow.